Hi everyone, welcome to my channel. If you know anything about the Canadian public education system, you know that it teaches us absolutely nothing about personal finance. And this is why I've decided to make a quick video about the absolute basics of the Canadian tax system, as well as the top 5 accounts that I believe everybody in Canada should know. I want to acknowledge that everybody's financial situation is different, and I am not a professional financial advisor. I am simply a fellow taxpayer who is passionate about financial literacy, and I'm just here to spread the word on my channel. It's ultimately up to you to figure out what account is proper for your situation and take the onus to speak to a professional financial advisor if you need to. Also, since we're talking about personal finance here, keep in mind that the rules of the game are different for businesses, but this is going to focus on individuals specifically. So in video number 1, which is going to be this video, I'm going to cover the basics of the Canadian tax system, as well as Canada's 2 saving buckets, which are registered and non-registered accounts. Then in part 2, we're going to talk about the HISA, sometimes also called the HYSA, the high interest savings account or high yield savings account. We'll talk about the RRSP, the Registered Retirement Savings Plan, as well as the TFSA, the Tax-Free Savings Account. And then in video number 3, I'm going to talk about 2 accounts that can help you to save up for your first home or save up for a child's post-secondary education, and that would be the FHSA, the First Home Savings Account, and the RESP, the Registered Education Savings Plan. So without further ado, let's get into the basics of the Canadian tax system. In Canada, taxes generally fall into one of 4 categories. That would be either income tax that you pay on any kind of income that you earn, property tax paid by property owners. This relates to things like public water services, policing in communities, cleanup. Then corporations also have to pay corporate tax, and sales tax is what you commonly see on your receipt when you check out at the store in the form of GST or HST. Let's take a closer look at income tax because that is what we're going to be focused on for these 3 videos. Canada has what's known as a progressive tax system. This essentially means that the more income you make, the more taxes you pay on that income. There are plenty of videos on YouTube that explain the tax system and Canada's tax brackets very well, but I don't want to recycle other people's videos, so I'll leave some links down below. The key thing to understand for this video is that the more income you make, the more you pay in taxes. You can earn money from different sources, and depending on where that money comes from, it will be taxed differently. This is what's known as taxable income. Taxable income includes employment income, which is income that you get from your employer. It's automatically deducted from your paycheck, and it happens to be taxed at the highest rate. There's also self-employment income for those of us who are self-employed. There's investment income, which would be anything like interest that you earn on your investments, dividend-paying stocks, investment properties. And then there's also what's known as capital gains income, which is the income that you get from a sale of an asset that has appreciated over time. Essentially, capital gains would be the difference between what you paid for that asset and what you sold it for. You'll be taxed on that. Yes, in Canada, we get taxed a lot. However, thankfully, the government of Canada also incentivizes us to save for our retirement and for big purchases through investment vehicles known as registered accounts. So with that being said, let's get into Canada's 2 saving buckets, registered and non-registered accounts. It's important to understand that an account is just like a bucket. You fill that bucket with your money, but then it's up to you to actually buy investments within that bucket that are going to generate interest and dividends and investment income. So government registered accounts are accounts which are registered with the Canadian Revenue Agency. The CRA is the body in Canada that answers for all things tax. And because you're holding your money and your investments in these accounts, you get special tax advantages as long as you comply with special rules. Meanwhile, non-registered accounts are exactly as they sound like. They're not registered with the CRA, and because of this, you don't have any special incentives, but then you also don't have to follow any kind of rules. A very important note before we proceed about taxes is that tax-advantaged accounts don't exempt you from paying taxes. You're still going to have to pay taxes because taxes are a very important part of running our society. However, it's just a matter of how much taxes you pay and when you pay them. And if you've seen my video about compound interest, you would know that time and principal amount are the 2 biggest factors that determine how much your compound interest can accumulate. So this is a big advantage of tax-advantaged accounts, which we're going to discuss in detail in videos 2 and 3. So let's summarize what we've learned on a quick chart comparing registered and non-registered accounts. The first question is, are there tax advantages associated with this account? As we discussed, registered accounts, yes, there are tax advantages. Non-registered accounts, no, there are no tax advantages. Can you use your money whenever you want? In registered accounts, sometimes. It depends on the account. With non-registered accounts, yes, you can use your money whenever you want. Is there a limit to how much you can contribute? Yes, registered accounts have limits because the tax advantages can be quite powerful, whereas non-registered accounts do not have any limits because you've already paid taxes on all the money in those accounts. Can you use your money on whatever you want? Sometimes in the case of a registered account, yes, in the case of a non-registered account. And finally, are these types of accounts favorable depending on your financial goals and situations? Yes, both accounts are favorable, and I strongly suggest talking to a financial advisor about your specific situation if you're confused about whether you want a registered account or a non-registered account by the end of these 3 videos. That brings us to the end of video number 1. Keep on watching part 2 and 3 if you want to learn about these 5 accounts.